Hello, guys. Welcome to today's stream. Me and AJ are here, as always, full of energy. And I mean, I guess you kind of can say full of excitement, but the market's going down.
Yeah.
So kind of affected our emotions, hasn't it?
Yeah, it's a bit annoying that, the market is going down and, we've got some TA to show you sort of why the market is going down. But there is some bullish news, Ben, a little bit of bullish news, about this Bitcoin wallet. The amount of Bitcoin wallets has hit an all-time high at 893,220.
Shout out to the whole coiners.
Yeah, so that's very bullish. And I was actually speaking to my neighbour yesterday, and I think I posted a little joke on Twitter about it. But I was speaking to my neighbour yesterday, and he said to me, "Bitcoin is a pyramid scheme, and in a few years, it's going to completely disappear." And I mentioned in the tweet, I slapped him in the face, ran home, and bought some more Bitcoin. I didn't actually, but I just said to him, "We'll see."
Yeah, well, I mean, the thing is, in a way, it kind of could be seen as a pyramid scheme because I make more money having bought some first if you buy some.
Yeah.
So as long as you invite two friends and they buy some Bitcoin and they invite two friends, it could be seen as a bit of a pyramid scheme.
Exactly.
But obviously,
it's not. Yeah, you can see it that way, but this just sort of proves to me, that Bitcoin isn't going anywhere anytime soon. Seeing the wallet addresses just continue to hit all-time highs, it just proves to me that Bitcoin is going to be here probably for the rest of our lives and the rest of our children's lives and grandchildren's lives if you decide to have children.
Yeah, you're absolutely right, to be honest. It definitely will. It will be around. It's going to be around for a very long time. But it also shows just how misunderstood Bitcoin really is, which I think is a bit of a shame, but, something that we kind of have to deal with in today's world, really, Now, sorry, you want to carry on?
So I was just going to, people get very scared about new things. It's sort of nature for humans to get scared of new environments and new things.
We're scared of what we don't understand.
Yeah, that's it.
That is true. And again, I put something on Twitter as well. And I outlined that like a lot of people are scared of Bitcoin. A lot of people don't understand it. But eventually, even within, I think, the next 5-10 years, Bitcoin will be touching all of our lives in some way. Maybe not Bitcoin, but I'm going to say crypto and blockchain technology. I'm going to say within 10 years, everybody will be affected by Bitcoin. So I think, we need to be in this space. For me, it's kind of like one of the most important, this is the whole reason why I work in this space. There's opportunities in other spaces, but like, why? You want to start. It's like, why would you not want to work within the internet space? Back in 1998.
Yeah, exactly. And that's where I think we are today.
Might be an example.
Yeah,
that might be why you don't want to. But still lots of opportunity. Anyway, let's jump into a little bit of the markets. What's going on? I'm just going to quickly give you an overview. So US futures have slipped amid focus on earnings and inflation. So everyone's kind of worried about inflation. I just want to touch on a little bit about the tech stocks. So NASDAQ has, in fact, maybe we can see it here. Give this little refresh. What we on here? Saw a little bit of a pullback pre-market. Obviously, we are still pre-market, hasn't opened yet, but a little bit of a pullback, and that's kind of based around Nvidia and also Micron technology. So it's kind of weighing slightly on the NASDAQ since we've already had kind of like, FANG, they've already reported earnings, but primarily everyone's kind of looking at these inflation numbers that are going to be coming out tomorrow. But the dollar has slipped for a second day as inflation concerns ease, which is, hopefully very good. Just to quickly add on here, here are some of the earnings that are coming out this week. And also, because everyone's worried about a recession, unsure as to whether it's going to happen, etc., we have seen that the yield curve between the 10-year and 2-year Treasury has kind of hit an all-time low, which historically has indicated that when we get down to these levels, we're in a recession. The yield curve inverts between the 10 and 2-year recession. Inversion, recession, inversion, recession, inversion, recession. And so now we are in a inversion, but are we in a recession? And that's the thing, we don't exactly know. Well, technically we are, but technically, depending if you know who you ask, we're not. And we have had very strong numbers from the job reports. So that kind of indicates that the US is not in a recession, but it's still something on everyone's mind. So primarily, we're going to be looking at, hopefully, well, a lot less volume until we have these inflation, the CPI data come out tomorrow. And that will be affecting Bitcoin, won't it?
That will definitely. I've just got a quick chart to show on that here. So I've marked every single date we've had the CPI come out since the 12th of January. And as you can see, after we get this data, we do see a lot of volatility. So back on the 12th of January, we did see a pretty substantial pullback. Same with the 10th of February, we did see a pullback and lots of volatility again with the 10th of March and going on and going on. We see lots of volatility. It's either a crazy pump, a crazy dump, or we see a big sort of range of where we consolidate between, like we did on the 11th of May. After that CPI print, we did see a big range here of consolidation before another move to the downside after the 10th of June CPI data came out.
And that's the thing, that we will be expecting lots and lots of volatility. So obviously the forecast this time, it's actually quite good that you put that in there. The forecast is 8.7% is the CPI forecast coming out. And so that will be tomorrow. We will be going live as always, because we sort you out. It's we're your boys, the CPI boys. And so we'll be going live and we'll obviously let you know exactly what has happened. And obviously I always go through the scenarios before and after. And obviously me and AJ then kind of look at that and how it, does affect the price of Bitcoin. Just one little bit of kind of news-ish that I want to drop on everybody is just looking at some of the liquidation data. So, you're in a trade, you get liquidated out of the trade. And then this is the data that kind of comes as a result. I'm going to refresh this just so it's very, very up to date. Over the past 24 hours, 156 million. And then if we're looking at this period of 4 hours, because this is kind of where we're beginning to see more of a pullback. And I'm going to say more of a, we'll look into exactly the timeframes later. But a lot of people got very, very excited. And I think we're kind of going more long as opposed to, kind of anything else. And so as a result of that, a lot of people are getting liquidated because they might have thought, hey, we're never going to come back down. And so, had their stop losses placed. And obviously now they've been hit. So this is what the data looks like on the screen, or on what am I trying to say? I'm trying to fundamentally, this is what the data looks like. Let's have a look at what it looks like kind of technically and how this reversal that we've seen in the charts is kind of playing out here, AJ.
Yeah, so if I just pull my screen up here, what we're looking at here on the 4 hour is a very, very strong support level in the shorter term. I did post this on Twitter as well. So if you don't follow us on Twitter, make sure you head over to our Twitter account, Satoshi Society, and give us a follow there, and make sure you press that bell notification as well so you don't miss anything. But basically what has happened is we have actually broken, literally just a few minutes ago, we broke this shorter term sort of major support level. As you can see, I've marked it up here with these red arrows. That is where the resistance was when we were below and was using this level as resistance. But back here, as you can see, these green arrows here show us that we have used this level as support as well. So it was a level that I was hoping we could hold, but unfortunately we have broken towards the downside. Now taking a look at the indicators, we are sort of getting into that sort of oversold vicinity, meaning that we could have a retest of this support level, which is now going to act as resistance because we are now below it. And I do think we will most likely get a rejection from this level because we've had so many rejections from this level previously. And there's also another chart that I want to show you. But getting below this level, it's not great. It does mean that if we come back up and get a rejection, we could come all the way back down to sort of this $22,500 level at this next support level here, which has been, pretty crucial support, but also pretty crucial resistance as well. So that is going to act as another support level for us. But what I'm looking at this moment in time is this chart here. Now, it's not looking too good on this chart. What we can see here is this bearish divergence. You can see we're getting higher highs on the price action chart. And if I pull up the RSI, you can see we're getting lower lows on the RSI. This is a textbook bearish divergence. You know that I showed you this bearish divergence here, and we did see a pullback as well. Now, this is just another bearish divergence, and we're most likely going to see another pullback. It is confirmed. You know, we've had these two candle confirmations here, and taking a look at the stochastic and the stochastic RSI, they're sort of neutral, meaning that we could have pressure towards the downside. I'm also looking at this ascending wedge as sorry, not this ascending wedge, this rising wedge between these yellow lines here. Now, this ascending wedge is actually, rising wedge is actually a bearish pattern. So if we were to break towards the downside, my first target would be this sort of blue support level here, around the $21,400 level. If we were to break that, then I think we could come down even further to around $19,300. Now, again, I posted this on Twitter. I posted a thread on Twitter about this, so make sure you head over to Twitter and give us a follow there. You'll get all the information before we even go live as well. And basically what is happening here is we are coming down and testing this support level. If we do break that level, I do think we can have another push towards the downside for Bitcoin. But obviously there is a chance we can find support along this level. You know, we found lots of support along this level previously, so we can, find support again. If we can do that, there's another scenario that I will be looking at. That scenario is getting rid of the two upper trend lines and actually drawing in a resistance box. Now, this resistance box here is looking to me, well, it is sort of a textbook ascending triangle. Is a very bullish pattern. If we break towards the upside of this ascending triangle, test it as support, and then we get that next move towards the upside, then that is very, very bullish. But of course, we need to hold this support initially at this at this bottom trending line here. If we can hold. My pen doesn't want to work for some reason. There we go. If we can hold this support, then that is very bullish. But as I said, if we do break this support, then it is looking fairly bearish for Bitcoin. Again, we do have this descending broadening wedge, which is a bullish pattern. We've broken towards the upside, but it's not all bad if we do come down to sort of that $19,300 target, because it means that we can come down and retest this this yellow upper trending line here, which will be very bullish, because as you can see on the example up here, we do tend to get a breakout, and then we get the pullback and the retest of the previous resistance, which will act as support, and then we get the next move towards the upside. And the upside is, we've got that first target around 31,000, and then the next target around 40,000. So for me, it would be bullish if we did come back and test this as support, but only if we held this as support. And then we got a nice bounce. So that's what I'm looking at sort of in the future for Bitcoin, and hopefully we can do that. Taking a quick look at Ethereum, we sort of have the same scenario on this 12-hour chart. We have sort of broken that as of right now, depending on how you chart it. But it looks like we have broken this support here. But again, we are in a major support level as of right now. Looking at these two horizontal white lines here, you can see that we've used it as major resistance previously, and if we go back, we've used it as major support, and we are sort of sat around that level. So hopefully we can hold this level. That'll be bullish. We can continue this price action towards the upside, but if we do break it, then I do think the next levels we're looking at are back down at $1,600 approximately, and then maybe all the way back down to $1,400. So that's what I'm looking at for Ethereum. Taking a quick look at the dominance. The dominance is coming down and getting ever so close to that support level. I have mentioned this is a very, very crucial support level. As you can see, it's major support previously. if we do break this, I mentioned this on Twitter this morning as well. If we do break this support, then for me, there is going to be a massive, massive altcoin season. But I don't think that's going to happen this year. I do think if we do come down to this support level, we will find some nice support and maybe come back and test this resistance up here. But in the future, if we do break this support, I think there is going to be a massive, massive altcoin season. And that's where I'm going to shift the majority of my portfolio into altcoins, taking that bet if we do break this support here, because I do think, there is sort of a long way that we can go down if we do break this support. So that's what I'm looking at the charts at the moment. I know, Charlie, you have asked to look at Rose, so I can take a quick look at Rose. What I'm looking at here is, of course, I've showed you this in the previous video. The 0.08685 level has been a major resistance level. So it is going to act as support now that we are above it. Looking at the indicators, to me, I do think we are going to get a pullback back down to this sort of horizontal yellow line here, because the indicators are so overextended at this moment in time. So for me, it is very, very healthy for Rose if we do get that pullback to that yellow horizontal line there. Hopefully use it as support and get a nice bounce off it, and then we can get that next move up to around the 0.014 level, which I've been talking about as well. So hopefully we can get that pullback, get that nice bounce all the way up to this 0.14 level. But as of right now, I would not be entering into any Rose trades. I'll be waiting to see if we can get that confirmed bounce off this yellow horizontal line here at the 0.086 level.
Yeah, no, you're absolutely right there, and I think that's kind of the we're going to have a little bit of almost sideways trading, I think, throughout the course of today. And I think while we have the news coming out tomorrow, a little bit of today, and also then tomorrow, people might just kind of hang off. So now is a really good time to be identifying those key areas and then putting in limit all orders, or whatever type of orders you might want to put in. But yeah, I would say definitely, looking at Rose, that looks prime for a pullback to then, have a massive move to the upside. I have another question here.
Great because... Sorry?
No, good. Keep going.
Oh, yeah, so those pullbacks were, they're great. That's what we're looking for, those pullbacks. And then the tests of the support, the bounce off of the support, and those are where we get those entries. We don't want to be buying at the at these levels that we are at right now. We want to wait for that pullback, then we can get our entries, and then we can ride them up to the next resistance level, where we then take profit.
Because I think that's one of the like major issues with people when they are, or even they begin trading, or even just trading in general, is that they often think like, okay, yeah, it's just gone up, it's broker support, I need to be in this movement to the upside. Which they get into a trade, their stop loss is obviously usually above the area of support, and then naturally it comes back down, it bounces off the support, and they're like, oh no, why am I not in it?
Yeah, exactly. So that's what we're waiting for, just that retest. And I am going to go live again, and I'm going to go through a lot of altcoins that we were talking about earlier, earlier on last week, I think it was. So watch out for that as well. I am going to go through a lot of them, because a lot of them are getting ready to sort of enter into a trade with them. And yeah, as I said, we're just waiting for those pullbacks to get those entries.
There you go. So also a question from Esteban. What's my take on the news coming out tomorrow? So I do think that we're going to have a short-term push to the upside, because I do believe that inflation, or CPI anyway, which is what most people are going to be looking at, I do think when we have that come in at a lower level, which I do believe it will, because it hangs very, very heavily. Let me just bring up the calendar here, daily FX next 7 days, and I'll just change this. Here we go. So obviously we're expecting this to come in lower, and I think it will, because the price of wheat, the price of corn, the price of oil, all of these different commodities that are included in the CPI but not in the core, have gone down. So we will see this go down. But core inflation, which is why this makes me feel good in the short term, bad in the long term, because it's the Fed who kind of focus on the core inflation, and so that's the only metric they go by. Now that means the general, cost of living is still going up, inflation is still going up, and so the Fed have to do more to kind of combat this. Even though this is coming down, this makes me scared in long term. This makes me happy in the short term. So I'm going to say a little push to the upside. Everyone will be slightly euphoric, but then I think we'll, probably become quite sad once the reality kicks in here. So if you are looking to trade long on, on this potential news, if we hit 8.7, then I think, we will. Don't make it a super long trade or super leverage, because I think you could, if you have your stop too close, you could get stopped out extremely quickly. So just
it is very hard to sort of predict it. Looking at the chart that I have sort of made for you here, we can see that when we have come in higher than forecasted, you can see here the 11th of May, we forecasted 8.1, came in at 8.3. Looking at the 10th of June, we came in at, so we forecasted 8.3 and came in at 8.6. And then in the 13th of July, we forecasted 8.8 and came in at 9.1. And you can see it doesn't really give us a clear indication of where the market is going to go, because you can see after the 11th of May CPI data, we did have sort of consolidation towards the upside, and the CPI data that came out on the 10th of June, that did crash the market, and the CPI data that came out on the 13th of July did pump the market, and this was all from the actual figures coming out higher than forecasted. So it is quite hard to sort of predict where it is going to go. So, as Ben said, just make sure if you are going to trade off of this, don't go in heavy, only very light, and only what you can afford to lose, because it is very hard to sort of predict off of this CPI data.
Yeah, and I've just seen a comment here from Health Plan. Rent makes up a third of the CPI equation, and rent in the US is going up. This looks like another leg down incoming. And I'm tempted to say, that's why I've said it's bad in the long term, because I think core inflation is going up, and I don't think we've seen the top of that yet. Obviously, even the US, the government don't think they have, because they expect it to be higher than it was previously. I'm talking about the core, this little 6.1 number that we're seeing here. And that's what the Fed listened to, and that if that's what the Fed are listening to, it kind of goes to reason that all of the institutional investors, they will do and operate in a market that the Fed is controlling, because rates go up, that affects the economy, it affects the stock market, and it affects everything that they invest in. So they are going to be more in tune, i.e. the people with lots of money who move the market, they are going to be more in tune with what the Fed is doing. And that's why I think, for now, with inflation 8.7, CPI might come down, but the Fed can't do anything for another 2 months, or 6 weeks, because they went on a little holiday. But so this is why, they can't really affect it. So 6.1, yes, it's bad, but the Fed are not going to raise rates by 2% or do something crazy. So I think we might have a little bit of breathing room, but I think the next CPI print, if this comes in at an elevated level like 6.1 or even higher, that's going to absolutely crash the market, because then the Fed are able to do something, and they might have to be like, all right, guys, look, you predicted a 75 basis point hike. Now I'm going to give you a 2% basis point hike, to get that inflation down, which is the one that they care about. But yeah, I think we're doing okay. I think we're pricing in an 8.7. Yeah. If we get above 8.7, then I think we're going to have quite a sad day. Bitcoin will drop, and just like you said, we could have that little leg to the downside. If we're in under 8.7, everyone's going to be pretty happy. But yeah, I think tomorrow, AJ, if you don't mind, you can go through and say, okay, well, if we do have a certain level, this is where I might enter. And then if we do have it, let's say, like above expectation, this level of entry, below expectation, this potential, or even zone of entry.
Yeah, definitely. I'll do that. First, I'll just show this quickly. What I've just sort of had a look at here is that when we had the CPI data that came out on the 12th of April, that came in higher than expected, and it did as well on the 10th of June. What we saw is these bearish flags that you can see here. So this first bearish flag here, when we got that data that came out higher than expected, we did break towards the downside, and we had that next leg towards the downside, and then we did have that again on the 10th of June. As I said, we came out higher than forecasted, and we did have that next leg towards the downside. We are in a bearish flag right now. So like the health plan said, if we do come in potentially higher than expected, then we could have that break towards the downside of this bearish flag. We aren't sort of testing the support, so I wouldn't be too worried as of right now, but it is something that could happen. We do just have to be aware this is a bearish flag that we are in at the moment, and we could have, again, like he said, that next leg towards the downside. So we will just have to keep that in mind. But looking
can
in the
short
short
just keep that up, AJ, for
Yeah.
1 second. One thing that I think is most important, and this is, just looking at this from someone who's understood, the finance world for a while, the most important thing we need to look at is that the arrows that you've put on there have gone from green to red, and then green, red, and the next one's green. So we're going to have a red candle or a red arrow just to keep this pattern. So my financial knowledge tells me that this has to be red because AJ made a pattern, and that means that we have to stick by this. So I think we're going to have a massive leg to the downside and $10,000 Bitcoin.
Potentially, if the pattern continues, then maybe it will. But as you can see, the start of it wasn't really.
I would just change it to green.
Change it to green. Yeah.
Yeah, no, I'm joking. Anyway, carry on.
Turn the chart upside down.
Yeah.
So
for Jim Cramer come out and say that he's bearish on Bitcoin, and then inverse Jim Cramer, the best ETF of all time.
Yeah.
Okay.
So looking at the levels on the 4 hour, if we can get back above this resistance, bullish, we can hold that as support, then bullish, I think that would be a great sort of entry point if we do. But again, we have broken below it. If we come down to this support level here and break that support level, then I think it is going to be sort of a shorting opportunity, because as you can see, this has been a major resistance level previously. We've used it as support as well. So for me, if we break above this, I think we will be quite bullish, and we will get to these sort of highs that we were looking at, getting closer to that 25,000. But if we do break this support, I do think we are going to see that next leg down. And like this chart I showed you here, if we do break this here, I do think we are going to have that next leg down, first of all, to that $21,400 level. And then if we break that, we're going to go down to potentially $19,300. So yeah, we're just got to wait and see what happens with that data. I don't, as Ben said earlier on in the show, I don't think we are going to see much volatility today. So I don't think that we are going to break to the downside today. But if we do get that bearish that bearish reaction tomorrow, and we do break down here, then I would be opening up a short position take profit at $21,400 first TP, and then second TP at $19,300. Bullish scenario, I'll be looking at the break of this resistance up here, of this ascending triangle. That's what I'll be looking at. I'll be looking for the break to the upside. Then I'll enter a long position, only a small long position, waiting for that retest, that confirmed retest, and then the bounce. I will be entering more into that position and riding that up to sort of the potential targets. I'll give 2 TPs for this. The first potential TP will be around $27,700, and then the second TP from the bottom to the from the top to the bottom would take us to potentially 30,000. So that would be a nice trade. But again, we're not sure on where the price is going to go, so we just have to wait for tomorrow. Hopefully we will get that break towards the upside, but again, there is that potential break towards the downside, and that will bring us lower.
Yeah, no, you're absolutely right, and you just have to be, I guess, prepared for any scenario, whatever happens. Guys, I've been rumbled. Esteban's mugging you off, AJ.
Micro manhood.
I had to. Esteban, what does MM stand for? What is? I assumed it was mastermind.
You got Magic Man, you got Mastermind. I don't know. There's all
Magic
sorts of
Man.
things.
When rich. God,
I'll take that as Magic Man. I'll take that as Magic Man.
Magic Man. Yeah. Okay. Yeah. My one. We'll forget what I said.
Yeah.
Market maker.
Market maker. Yeah.
I wish he was a market maker.
Yeah, I wish.
Yeah. Filled my orders at $10,000. Jokes. Okay. All right, guys. Also, just a question here. Since we have some of you online, drop us a comment here to let us know. So what we're thinking of doing is kind of having one slightly longer video where we'll have it more as like a kind of a relaxed podcast, a lot more engagement, and then maybe have, I guess some time to answer more questions, etc. AJ, am I explaining this right?
Yeah, exactly. I think
more like a podcast almost.
Yeah, more like a podcast. Lots of interaction with you as a community, but we will also have another video as well, sort of directly going into the fundamental side of things, and then another one directly going into the technical side of things, just so it gets, if people want to just look at the technicals, you can go ahead and look at the technical video. It's going to be a very straightforward video, literally just telling you the levels we're looking at, the levels that we want to break, the levels that we're looking at, the price coming to if we do get that break, and then the fundamentals where Ben will be going, having a deep dive into those fundamentals, like you did on that previous video. I forgot which video it was. When you went into gold, no, it wasn't Goldman Sachs.
Oh, Aladdin and BlackRock.
That was it.
Yeah. That was actually I was kind of happy with that. That's all right.
Yeah, that was a good video. Stuff that I'd never even thought about before.
Yeah,
and it sort of woke me up.
That's what I really like. I really like is like, because as much as I do love crypto, the market cap of crypto is like $1 trillion. I know it's like a little bit more, but anyway, let's go $1 trillion. Like the market cap of, I'll bring this up now. Company market cap here. So the market cap of Apple alone is $2.65 trillion. That's just one company. Now, if I bring up coin market cap, where are we? Coin market cap total is 1.1 trillion for all of crypto. That's Bitcoin, Ethereum, your favorite altcoins, all the shit coins, everything together. It's just like, it's crazy, So Apple's 2.5 times bigger. I just think like there's so much money and there's so much like equity in the world. We have to think about who's actually controlling this and who's moving these markets. And something like Aladdin, which is like a network of computers, of 5,000 computers, it has access and it's analyzing and making people aware of, or in a way indirectly managing $21 trillion. So some of that money moving into crypto would be absolutely insane. Even if you just took an extra $1 trillion, you're doubling the price of every crypto.
Yeah,
which is a bit mad.
It is.
I kind of like that.
And when they realize, the big potential for it, I'm sure they see potential in it. But once they see how this can change the world, then I think they're going to put a lot more into it as well.
Yeah, and I think honestly, like over the next couple of weeks, we are going to see Ethereum, providing the merge takes place and it's successful. I think we're going to see a lot of money that's just been sitting on the sidelines, ready to get in. Yeah, and there's a trend. Maybe I'll look into exactly finding out the numbers for you, but there is definitely a trend of the amount of crypto that is being, cash that's being massively accumulated by these guys, and it's waiting for the opportunities. Because obviously, if while stock market's in free fall or everyone's worried about recession, they're not going to be, just deploying loads of cash. And I know that from different articles, etc., that Ethereum is on the watch list, but if you invest in it and the merge goes to shit, you know, you just wasted a load of money, especially when it's not your money and you're managing it for someone else. You kind of can't really do that. So once it's successful, then there's going to be a lot more interest in the space. But anyway, that is everything. So thank you guys. Nice to have you all around.
Yeah, make sure you slap that like button if you haven't clicked it already. It does help us out a lot, so I would appreciate it. You would hit it.
There you go. I don't know if this is going to be the new the money slogan. I kind of want to make it the new slogan, but I think he's probably going to get me back, aren't you, AJ?
Yeah,
I'm going to get sabotaged here. I've put my life on the line for you guys. He's coming to my house, I tell you. Jump on a plane and come over.
Yeah.
Okay. All right. Anyway, guys, thanks for sticking around, and we will see you tomorrow going live at I don't want to say a time because everyone's time is different. 5 minutes before the news. It's 5 minutes before the CPI.
Yeah.
Yeah. Anyway, there you go. All right, guys. Thank you very much. Have a great day, and we'll see you tomorrow.
See you later.